HDFC Bank has fallen so much, but it is still a strong bank, right? So there should be a safe opportunity. That is exactly why people get trapped, because nothing looks obviously wrong, but right now HDFC Bank is under pressure from multiple sides at the same time. And if you don't see this, you will completely misread the stock. Stay with me till the end, because I will break down exactly what is happening inside HDFC Bank and why it is behaving like this right now. Once you understand this, you will stop guessing and start reading the stock properly. HDFC Bank is not just a stock, it is a system. It depends on liquidity, interest rates, deposit, credit growth. So when the stock moves, it is not random. It is reacting to changes inside the system. And right now, that system is under pressure. And that pressure is coming from three different directions. Let's start with the most important factor, liquidity. Banks run on money availability. So if liquidity is strong, banks grow easily. Whereas if liquidity tightens, the pressure builds. Right now, system liquidity is tightening. Cost of funds is increasing, which means banks have to pay more to attract the deposits. Banks don't struggle because of fear, they struggle when money becomes expensive. And this leads to the second pressure. Banks earn from the difference between lending rate and the borrowing cost. So when funding becomes expensive, now this gap will shrink. So even if the business grows, profitability gets pressured. This is not visible immediately, but it slowly impacts the stock. And then comes a third layer. HDFC Bank recently went through a major merger, and mergers don't settle instantly. They create balance sheet adjustment, deposit mix changes, growth versus stability trade offs, which means the bank is still stabilizing. This is not a broken system, but it is not a fully settled one either. And this is where things get confusing, because at the same time, the brand is strong, long term track record is solid, valuations are lower than before. So people are thinking this is a safe opportunity. And that is not completely wrong, but it is not a completely right view either. A strong business at the wrong phase will still give you weak returns. So now let's connect everything. Right now, liquidity is tightening, margins are under pressure, structure is adjusting. So what happens? The business remains strong, but the stock struggles to move. That's why it feels strange, because fundamentals look fine, but conditions are not. And this is where most people go wrong. Most people think good bank means good investment right now. But markets don't work like that. Timing matters, conditions matter. If you ignore the phase, you misread the stock. HDFC Bank is not weak, but right now it is under pressure from liquidity, from margins, from structural adjustment. And when all three align, stocks don't move cleanly. If you understand what is driving HDFC Bank right now, you won't just follow the stock, you will stay ahead of it.